People were tokenizing a picture of their friends' moms in high school as NFTs and then trading them in between each other on their phones. That is not a good example of real world tokenization. But you can tokenize stocks, bonds, private equity, real estate, hotels, insurance-linked securities. In that case, you're actually tokenizing risk. So if you look at the kind of the world today, you've got the middle class has been basically gatekept from investing into things. So they could only invest in the stock market, which is the public stock market, which is highly manipulated, or real estate, which is overinflated and they're priced out. So this tech now gives you a gateway to access private equity and build up a strong middle class again. The real mission is to take this world of analog investments and completely digitize it. So, and then obviously on our own network, but it's about having this digital infrastructure for investments. You have to look at the incumbents and look at them and say, okay, well, they're huge and they've got so much deal flow and business and everything that's going on. And you say, I know I can do it. You know, there's a better solution for it, but they're not adopting it. Then you have to have that audacity to go out and say, I can do it better.
What do you think made them the ones to really believe in you and bring them around?
It's a bit of sales with a bit of flirting, with a bit of confidence, and it can't be too much of, it has to be the right combination of all of them. Your brain needs to be a sponge of information, and only then can you make the right decision in the global context, because one decision right now might be the right thing, but it might not be the right long-term thing.
Hey founders, ready to match with your next investor? At lucidityinsights.com, we've built the Middle East's first Tinder for startup founders and VCs. Explore 800 verified VC and angel profiles, see who they're funding, and send your pitch deck directly, all in one place. Stop waiting for introductions. Make your own luck at lucidityinsights.com. And for a limited time, get 20% off your startup registration with the code TPP20 at checkout. So today's guest is Alex Davis, the founder of Mavryk.org. It's a next-gen decentralized financial platform reimagining how real-world assets, or RWAs, are tokenized and traded. Mavryk's raised over $10 million to scale their business, and I'm sitting right here with Alex to school me on all things blockchain, real-world asset tokenization, and just talk me through the challenges of the fundraising journey and how to build a business here in Dubai.
Okay, well, challenges. Well, first off, it's a pleasure to be here to begin with. I'll start. You know, Alex Davis, originally from Los Angeles. We kind of covered this in person a week ago, but for everybody watching, founded Mavryk. We can dive into everything Mavryk does and did and see they're doing. But this just right off the bat with a question on fundraising, the challenges. Starting a business in Dubai is actually relatively easy in terms of like the corporate actions and the bureaucracy that you have to go through. One of the most blessed things about this place is just how easy every bureaucratic, I mean, I hate bureaucracy. It's a nightmare. I've lived in the most bureaucratic places in the world, and Dubai just works. Like if there's a rule here, that's the rule. If you need to do A to do B, then you just do A and then you do B, and then B allows you to do C. Yeah. Where in every other like country, you want to start a company, like let's forget about the challenges of fundraising, building a team, building a, getting like a USP or go to market, product market fit. There's the actual implementation of a business that is like corporate management or startup management. That's a nightmare. Mm-hmm. In Dubai, it's just super simple. So just A is A, and to do A, here's the list. Go 3 tasks, go get them done. For B, 4 tasks, go get them done. And it's just this step-by-step process that functions. Where in other countries it just goes, okay, in order to do A, you have to do B, but you only know you need to do B if the person who was at A had their coffee and they're in the office. Right. And then B, it's like, well, it's a Tuesday, so you can't do B on a Tuesday because they're working in some other bureaucratic office on a Tuesday. Yeah. And then your number on the back of your license is the wrong number on a Wednesday. I mean,
that explains, that was one of my questions for you later on, because you have worked in some of the biggest tech ecosystems around the world. And I really kind of questioned, like, why did you decide to set up Mavryk here in Dubai?
Well, there's a couple of reasons why Mavryk in Dubai. One, the quality of life here is remarkable. The cost of living is mostly rent, and there's something for everyone on the totem pole in Dubai. So I know everyone from billionaires to blue collar workers to middle class, growing middle class. Everyone's just trying to level up their life wherever they are. So there's this strive and drive of everyone here. For a company wise, I mean, the taxes obviously help. It's a lot simplified. Forget about the fact that now they're bringing in corporate tax, not on free zones, but it's all, again, more simplified. Where in the United States, you look at California and the tax code is, it's insane. So that's one thing there. When it comes to blockchain and crypto, Dubai is one of the most forward-thinking places in the world. The ARVA token regulation, which is the asset referenced virtual assets, from VARA, which is the Virtual Asset Regulatory Authority. You got to get used to acronyms over here.
Yeah.
Is one of the most forward-thinking digital asset frameworks in the world. And instead of, look at the fights that the SEC was having against innovation in the United States, in Dubai, it's forward thinking. And so it's just really a no-brainer of like, okay, growing up in Los Angeles, LA is kind of a place of like, you either made it or you didn't. Like, you can make it in some fields, but it's really almost a pre-accomplished city at this point. Where in Dubai, it's a city that is building for where the puck is going in a very new digital economy. And so you kind of don't want to get stuck in the legacy past.
I love that. So you really feel that, like, because obviously we've covered all of the news stories at Lucidity Insights on, VARA formulating, a lot of the government really trying to create like Dubai as the blockchain place to be. I think at one point Dubai's government said that they were the most or the largest government in the world that had implemented blockchain within government things. But there's always this question that people have of like, how much of this is like putting out a strategy and a desire to be that, and then actually being implemented on the ground?
I think one leads to the other, though.
Yeah.
Right? When you have, the United States, until more recently, was actively fighting against innovation. When you put out a framework, and then that framework, it's not going to be perfect the first time around, right? And nothing you do in life is perfect first time around. And then you see, okay, we're going to look at this. Did it work? Are we going to iterate? Then you move on to the next thing. Did it work? Did it iterate? So, you see that there was a pilot program from the DLD regarding tokenization of real estate, of fractionalizing the title deeds. And then after that, VARA came out with a framework that allowed for a wider range of tokenization. But it's not just, this is for real estate and that is for other assets. It's, we did this, we learned, then this other organization that was started, like, we moved here before VARA even existed. So
when did you guys move here? When did you guys launch Mavryk?
2022, we came over, and it was, we closed our first funding round pretty, towards in 2022, and then started building. And that was, again, building in COVID is a little difficult because I guess the remote work helped in a way, because our team is in about 7 countries now. So you kind of have this almost fully remote team, except for the core, most of the core team in Dubai. And we have to move some people over, some people we hired here. It was interesting in that light. But it's all about iteration. So there's a lot of talk in the Middle East of like, we're going to go do this. If you look at some of the regional neighbors and what their ambitions are, but it's kind of like shoot for the stars and at least you'll fly.
Yeah.
And you learn along the way of what you really need to do, because there are plenty of people who kind of think they can go and do something, but they never leave their couch.
Yeah. Yeah.
So
it's best to have lofty goals. I love that saying. There was a saying, shoot for the moon and you'll land amongst the stars. And
that might have been the line. Yeah.
And I love that, because it's you have a North Star that you're aiming for, and you're almost guaranteed never to make it to that star. But, along the way, you're going to get somewhere pretty significant versus staying on your couch.
Yeah.
Yeah.
100%. It's one of those things in startups. If you're going out to go start something, we started, Mavryk actually as Maven Finance, the banking arm that we built for what we wanted to do in our previous ecosystem, was be the lending bank for security token offerings, STOs as they used to be called back in the day. Now we call them RWAs.
Okay.
And we just didn't find the right environment for STOs on our chain. There wasn't a conducive leadership environment for that. So at the same time, concurrently, I had some partners starting like a crypto investment fund, and so I joined there as a co-founder. And then we had this. It was anchored by a real estate billionaire in Alaska. So we had this concurrent path of, okay, we've got deal flow to tokenize, we've got assets to tokenize them with, right, to collateralize and use them as, mortgages, lending, etc. But we didn't have a conducive environment. We didn't have a tech stack. So we ended up, the tokenization tech stack, marketplaces, lifecycle management, etc. So we built lifecycle management, we built out the chain, and then we had our deal flow and we had the bank. So now we've got this full stack ecosystem. But we started as a banking DApp for assets. So it's kind of like, okay, we were shooting for this. And we have this big lofty goal over here, and we're going to have to do all those parts. But then we had to pivot and then pivot and then pivot and change. And so you have to kind of constantly roll with the punches because, we're going for the moon.
Yeah.
But you got to get into the, into the air first, then into the atmosphere, then learn how to, circle around the earth and you get there. So
yeah,
it's just kind of on that startup path of pivoting.
Yeah.
Shoot for the moon, you get the stars.
Yeah. I love that. Okay. Well, as I mentioned to you before, we are not necessarily a Web3 podcast, but this is like the next gen technology. We've got tech founders tuning in. We've got investors tuning in. There's a lot of talk out there about blockchain this and blockchain that. I want you to break it down for us. So what's this big vision around blockchain technology? Why is it so important? What inspired you to build Mavryk? And also, I understand it's a layer 1 blockchain, which means it's your own proprietary blockchain. So I want to let's start with the basics and then ramp up really quickly. Why is blockchain so revolutionary? Why does it need to be here? And why are you involved with it?
Okay, I'm going to have to tailor this for everyone watching who, you're going to get, the techies who watch this, and they're going to think it's really dumbed down, and you got to get...
Yeah, we're going to start dumbed down.
They need to understand it, so I'm going to
totally
try and strike a balance between it all. Why we started Mavryk and what we do and why tokenization is such a big deal. The funny thing is about the Web3 industry is that, unfortunately, there's a lot of BS and garbage in it because it became a very easy way to raise capital. The tech layer behind it that allows for all of the building and innovation to occur is actually quite remarkable. And that's why I like to think of, people say, oh, it's Web3, oh, it's blockchain, oh, it's this. And they kind of, they compartmentalize it into a certain box of that's gambling, that's speculation, that's grifting, that's fraud.
Totally.
And now finally we're starting to see that people are, peeling back the layers of, wait a minute, but how did you do this? What are the use cases that you can do with it? And who's been building these things for a while? And so you're going to see a lot of entrants in the RWA space specifically this year. But I like to look at it as, you think about, Napster and LimeWire and Kazaa back in the day. I'm from that generation.
Me too.
Where
we used to steal music online. Yeah.
It was file sharing.
That's right.
But, we would, you'd burn a CD and you'd get these MP3s and you download like a new MP3. And all that was, it was music. The MP3 and the file sharing, it was just another medium for getting the song or sharing the song with a friend or listening to it in your own way, which is now can be streaming. And so you get a lot of, when there's innovation, you get a lot of chaos, so the stealing music and which Napster and LimeWire, there was a lot. I get the idea of file sharing because we file share on WhatsApp too now.
Yeah.
Right. You can send a PDF or a document across. But in the beginning, there's a lot of grift in innovation until things, I would say, find some sort of symbiotic middle ground between regulation, use case, getting rid of the grifters, etc. So blockchain and all that, RWAs are just another medium for accessing investments.
Okay.
Right. So we call them RWAs today, but in a couple of years, it's just going to be an investment. We don't say I streamed this MP3. You're like, no, Taylor Swift dropped a new album.
Right.
Right.
Well, let's talk about what constitutes a RWA. So real world asset. What can you tokenize? I know you guys are focused on real estate right now, but you can tokenize anything.
People were tokenizing a picture of their friends' moms in high school as NFTs and then trading them in between each other on their phones. That is not a good example of real world tokenization, but you can almost tokenize. I like to think of real world tokenization as the digitization of the ownership over an investment or an asset of some kind. So
Okay.
it could be a Babe Ruth signed baseball or a bat. And that's a great use case for an NFT because it represents like a certificate of authenticity and tracking the provenance of ownership of that single unique asset. Or it could be the, fractionalization of a hotel in Iceland, which we're doing. So it's you can have, it's kind of like a single asset REIT for the case of real estate, but you can tokenize stocks, bonds, private equity, real estate, hotels, insurance-linked securities. So in that case, you're actually tokenizing risk. There's all different sorts of things. One of the most popular ones, if you think about it, even Tether, right? They just launched USAT in the United States, a US stablecoin. That is a digitized version of a dollar. Technically, that's a form of tokenization.
Interesting.
I tend to look at tokenization as a more of an access point into asset classes that have been stripped away from the middle class. So if you look at the kind of the world today, you've got the middle class has been basically gate kept from investing into things. So they could only invest in the stock market, which is the public stock market, which is highly manipulated, or real estate, which is overinflated and they're priced out. So you have to afford really to invest.
Yeah.
So this tech now gives you a gateway to access private equity and build up a strong middle class again. And so there's a lot of people who say tokenization is unfortunately minting a token for something, but it's really the combining of taking that real world physical asset or investment class, because it might be not a physical thing that you're tokenizing like ILS, and then tying it to that, giving its ownership rights to that token, and then the digital infrastructure that comes with that. So once we've digitized music, now we've got streaming, now we've got YouTube, now we've got Reels or phone ringtones, which I don't think anyone uses anymore at all. If your phone's not on silent, you might make it really awkward for people around you. But imagine having Akon blasting in the background as you need to answer a call.
Right.
But it's just going to be the mechanism for how we invest in car insurance, or how do you invest in West European hotels as an ETF. I mean, it just opens up this world of
Interesting.
digitization that you can own anything around the world, get a loan against it instantly, trade it instantly, as opposed to calling your lawyer, drafting paperwork, getting an accountant,
Right.
finding a counterparty.
But like right now, you can invest in certain ETFs online if you go and educate yourself on how to use some of these trading platforms for $5 a month or whatever. But walk me through, like, when you say I'm going to get access to private equity deals, for example, through this, walk me through what a case example might look like specifically, with what you guys are doing at Mavryk.
Trying to think of things I haven't signed an NDA for. So
You could speak in hypotheticals.
hypothetically, if there was a company sending rockets into space. So when it comes to like these private equity deals, a lot of times they don't make it to public markets. Public markets now are highly, overly regulated. A lot of cost to IPO or SPACs and whatnot. And so the access to these things are, for regulatory wise, has now been gate kept. But then also it's hard to approach the public masses because of, again, regulation. So what it allows you to do is, like, when was the last time you bought a piece? Like when you bought your last investment, right? Was it a hotel?
No.
Okay, can you
Like
give me something that you bought as an investment recently?
My last investments, I mean, ETFs is pretty much where all of my investments go. Yeah.
Right. So,
or real estate, like my own personal property.
Right. And then even then you need 20% down, you need to get a mortgage.
Totally.
The whole process and a bit of a nightmare. I honestly want to get out of every analog owned thing that I have and go, I'm in the process of going completely digital, but it's, when it comes, I think there's an important caveat to make between trading and investing, because you've got these long-term investments, and that's where I think really RWAs take the lead. There's a big thing about RWAs when they ask, like, where's the liquidity coming from to trade a Hilton hotel in Miami? I was like, well, no one's really going to trade the Hilton hotel in Miami, right? RWAs, private equity, are natively illiquid assets, even if you do make them public. So there's trading, which is a speculative, almost gamble on the volatility of some form of asset. And then there's long-term investing. RWAs are more tilted towards long-term investing. And then you've got other mechanisms for, leverage trading, leverage prediction markets. We've got one coming to Mavryk soon. Which is, it's like that. That's like a speculative gamble. There's traders out there, and then there's long-term investors out there.
Yeah.
So
Okay. And I would say most middle class, if they were talking about investment strategies, the right one would be a long-term,
long-term
buy and
investment that
hold.
compounds over time and pays you dividends,
Right.
as opposed to where they're really going today, which is they're trying to do high-frequency trading on their own account, not realizing that the world of, trading is using bots. They're looking into trying to get 10x, 20x, 50x investments, 100x investments. And so it's really shifted from, okay, we don't have the ability to go invest anymore because it's not allowed to us, and they've been driven towards these high risk investments, which ironically the regulations are blocking them from investing to keep them away from risk. Look at GameStop. GameStop was, to me, was a form of desperation. It was
A rebellious act
a rebellious act against,
to show how manipulative the forces can be.
and also like for the people that were jumping on board, it was like, okay, because you can get you can instantly make money off it, right? So it is kind of like a big middle finger to the man, while at the same time a desperate act to get some form of return.
Right. Okay. So I read somewhere that you guys are trying to get $1 trillion of asset, like real estate assets on.
Talk to our marketing, our CMO about that. Yeah, we're
Or how much is it that you guys are trying to get on
$8
chain?
billion, and we're 3% along the way there. So, or three. No, we're point. Or no, yeah, we're 0.3% on the way there. So, but it's
That's your North Star. That's the vision, is to try and get as much real estate from here in the UAE or globally.
It's global. I'd say our North Star and our real mission at Mavryk is to get a full ecosystem of digitized investments, whether that's real estate, insurance-linked securities, bonds, sukuk, the Middle Eastern version of bonds, mortgages, etc., into on-chain, meaning using a token to represent their ownership. So you can buy $100 worth or $1,000 worth or $1 million worth, and then go and be able to go take into any myriad of financial services applications on our network. So whether that's Maven that we've built or something else that comes online, where you can then go get a mortgage to go buy even more investments, or you can go, HELOC, like a home equity line of credit. So a credit line against your assets, and then go use that cash to either go reinvest or buy your kid a new, iPhone. But the real mission is to take this world of analog investments and completely digitize it. So, and then obviously on our own network, but it's about having this digital infrastructure for investments.
And I can see that you're really thinking big, like beyond real estate, basically all of these elements in an entire ecosystem of downstream products as well, or remortgaging or refinancing. It's really, you guys are kind of building a digital bank.
We already built a digital bank. That's what Maven is.
That's right, Maven.
So you can go to Maven, go deposit USDT to go get yield on that USDT. That USDT is then lent out to people who put their portfolio of assets into a vault, and they can get a loan against those assets. That's effectively how the bank works. But what differs Maven there is that with separately than most blockchain decentralized finance applications, is a lot of the governance is not connected to the token. So owning the token and actually taking part in decisions for the bank are done all on chain. So the entire corporate and banking governance is on chain. And
so that means your community that's investing and using Maven is actually helping you govern?
It depends on the user, and there's different user flows. So there are guys who just want to have a savings account. There are people who want to borrow, right? So that's the two different user profiles, might be overlapping at some point. And then there are people who want to own your token so that they can have a share of control of ownership of how the bank makes decisions. What asset classes are used as collateral? What type of lending algorithm are you using? What are your liquidation mechanisms? Are you going to give mortgages? On what assets do you give mortgages on? So that is all controlled by voting on chain in a very public, transparent manner.
This is very, as I hear you speaking about this, it feels incredibly ambitious. It also feels like perhaps your competitors might actually be eventually big institutions like JP Morgan or Blackstone or some of these big guys getting into this space. Do you see yourself, do you see them as your main competitors, or And I feel like when we say RWA, anyone who says, oh, we're in real world asset tokenization, they might just take a little segment here or there, but you're really trying to create a larger ecosystem for everything.
There's so many questions to answer in that.
I know.
Long story short, yeah, making up for not being a doctor to my mom. And that's why I've taken the world on my shoulders on that. Yeah, it's a big endeavor, I have to say. There's a lot going on. All around, everything from the layer one, the blockchain, like the Mavryk layer one infrastructure, to how that works, to how equities, the RWA tech stack works,
Yeah.
tokenization, trading, and lifecycle management of assets, to how Maven works. There's I think I mentioned it right before this, we've got a perpetual prediction market with leverage that's coming on to us as well. So that's more of the speculative trading. That's the gambling side.
Yeah.
But there are a lot of interwoven pieces, and yeah, a lot of our competition takes one part of it, right? Securitize just did a $1.25 billion IPO or valuation for their IPO. They just do the tokenization. Their secondary markets is negligible. Both secondary markets right now are negligible. A lot of people just do primary. A lot of people just do the tokenization of the asset, or lending against a certain type of asset in a centralized way, or data oracles, or the RWA ecosystem, no pun intended, is fragmented and fractionalized.
Yeah.
And what we're trying to do is make sure that if you tokenize something with us or in our infrastructure, that you'll be able to use it in lending. You'll be able to use it within a Fireblocks wallet for custody, or all these other different things. So it's kind of like a more of an Apple-like experience, where I know my Apple mouse works with my computer, which works with my phone, which syncs with my watch, as opposed to, trying to get a printer working on Windows.
Right. But it also sounds like if you're trying to build the entire ecosystem, this could take decades.
Well, we're jump-starting an ecosystem. It's not
Okay.
going to take decades. Larry Fink and everybody at like BlackRock and EY and Morgan Stanley and Standard Charter, they're all talking about tokenization being the next, and stablecoins being the next wave of how financial systems are backed. And that's where I circle back to the Napster and MP3 kind of argument, is that at the end of the day, this is going to be infrastructure for all forms of investment in money. If you think about a blockchain is the only way to give you sovereign ownership over any asset that's digitized. If you have money that's in your bank account, it's not really yours. If you're using a credit card, it's now digitized money, but you're confined to the restrictions of Visa and the whole entire banking system in that way. Right. So when was the last time you did anything that was really analog? Why are investments still analog?
Interesting. Very interesting. Okay, let's circle back to one of the first questions I asked you, which is around the challenges of fundraising. Because even the last few minutes that we've been talking about what you guys do, obviously I'm not a blockchain expert, but I'm sitting there going, wow, it's taking a moment for me to wrap my head around everything that's within your business plan or vision and mission. How do you convince a bunch of investors on this mission when it's obviously cutting edge? Like you said, it's a forward-thinking business where you're building something that doesn't exist today.
Yeah, I was once told by someone, being an entrepreneur is one part intelligence and another part like chutzpah. There's like brazen, I don't know how to translate that, but like people from the States would get it. Audacity. Right? Yeah, I have to look at the incumbents and look at them and say, okay, well, they're huge and they've got so much deal flow and business and everything that's going on. And you just say, I know I can do it. There's a better solution for it, but they're not adopting it. Then you have to have that audacity to go out and say, I can do it better.
Right.
And you have to take on, the world in that case. When it comes to convincing investors, it's an art and a process, especially in a field so rife with grift in a way. We've done the hard part, thankfully, at this point, right? Like we've raised 2 rounds. We've got all of our products on MVP. Our network infrastructure is live on mainnet, and our first tokenization partnership is going live early Q2. So the easiest way to raise capital, in my opinion, would just be, if you have an MVP. If you've got a product that can kind of showcase what you're building. But raising capital is, no if and or buts about it, a pain in the butt.
Yeah.
It's a nightmare, to a
And what's
degree.
interesting about what you just said, though, is you did raise your first round before you had an MVP, right? That first round was for the MVP to get built.
That was for our lending bank to get built. And so we built that, got that onto our test net. And, right as we were getting close to completing that, the entire market took a downturn for like 2.5 years.
Mm-hmm.
And that's when it really, you start to think like, okay, we're going to need to pivot. While most companies were firing staff, we were pivoting and expanding the company.
Right.
So it was a bit of
Interesting.
a decision. It was quite a decision to take at that time. But yeah, we in the blockchain space in 2017 to 2021 was a decent period to raise capital.
Mm-hmm.
But the journey of how we got there was kind of led me to the point where the next thing that I want to start after 4 other things that I have in my list is there must be an easier way to get capital, and good capital at that, because there's all forms of capital that come. It's not just a dollar sign. There's caveats that come with it, usually, or personalities.
Yeah.
To match capital to good ideas, to founders that can execute.
Yeah.
Because in the beginning, it's mostly about, is your idea viable or plausibly viable, right? Like the idea of sleeping in someone else's house because you swiped your credit card didn't seem like a realistic thing 15 years ago.
Yeah, absolutely.
And now you can like host people in your house and it's called Airbnb.
Yeah.
But it has to be plausibly viable, and you also have to have founders that can execute on it, because in the very beginning, it's all about execution. My mom would always tell me, don't tell people what you're building. And then we open source 90% of it, but don't tell the people what idea you're building, because then they'll take it and run. And maybe that would have been the case in like the 70s, right, the 80s. But in a more digital world, it's all about execution.
Yeah. It's about collaboration. It's about, people still in this region come to me and say, hey, Archive, can I just send our pitch deck to anyone? What if they steal our idea? And I'm like, if it's that stealable, then, and you don't have faith in your own team that you're the best ones to implement it, then it might not be the right idea for you.
Yeah. Or you don't have a moat, or it's too easy to get into, or it's that dumb of an idea. Or...
Yeah. So take me back though. Let's start with this, because a lot of people are looking to raise their first round or thinking about fundraising. You guys decided, instead of bootstrapping, to fundraise right away for Maven, right? Your banking arm. How did you go about building out which investors to approach and bring on your cap table?
Well, luckily, blockchain investors are quite
limited.
Well, I was gonna say vocal. Yeah, they're everybody's on Twitter.
Okay.
They're you can. There's a lot of the crypto. We call it crypto Twitter for a reason, right? Or X. But there's a lot of companies that are out there, and investors, events. If you went to an event it could be a full-time job going to crypto events in Dubai 24/7 every single day of the week. So there's no lack of kind of finding investors, narrowing it down to who will invest in you. I think it's more about, and I don't even think it's finding investors as much the hard part. It's about getting the name brand and strong lead who will kind of take you under their wing and then rope in the rest of the guys with you. So in both those cases, once we got our leads, then the rest fell into place.
Interesting.
So everybody's looking to like shotgun, spread their pellets as wide as they can to get individual cases. But really it's one of those like a leader.
Get your lead investor, anchor investor, and the rest works itself out.
Anchors in blockchain, they almost, especially on the smaller rounds, they're not really anchors as much as who's got the name and roping in their friends. It's not like the traditional Series A or Series B where there's like really like a real anchor. It's more of, follow the leader. I've had VCs come to me and tell me, oh, who's anchoring your round because their DD is our DD. And so you get all these venture capital funds who aren't actually doing any due diligence, and they're just literally following the leader. And then when you go into a down market, everything collapses and everybody's struggling. It's like, well, we did our due diligence of checking their LinkedIn.
So who was your lead investor that roped in all of his buddies?
Well, the lead that helped get everything started at the beginning was Draper Gorenholm. with Joseph and Alon. Joseph's here in Dubai, and then in our expansion round was Multibank with Zach, the CEO, that roped in a lot of the Multibank themselves as a platform, and also a lot of their connections that came into that round.
And what was it about? What do you think made that connection? I mean, obviously you guys meet, you guys talk, but what do you think made them the ones to really believe in you and bring them around?
Oh, it's a good question. There's all forms of different founders. You get the guys who like build something in their garage, which I always joked around I wanted our story to be, but it wasn't quite. Um, or you have to have quite a bit of a personality to connect with people. So you have to not only sell a dream and a vision, but you can't just sit in a corner and be like, I have the best tech, or I built the best tech, and then not like get it out there. It's a bit of sales with a bit of flirting with a bit of confidence, and it can't be too much of. It has to be the right combination of all of them. When the way that it worked with Multibank, I was actually brought to help them structure their token before launch, because they just rebuilt their crypto exchange, and now they're moving towards RWAs a year later.
Okay.
But the CEO and I instantly clicked. He really always wanted to get into RWAs and the tokenization of assets, but didn't have the tech, and the company is in derivatives and CFDs and trading, and we had the tech, but we didn't exactly have something to connect us. And then one day someone called and said, hey, we know a company looking for a tokenization solution. And he goes, I know just the guy. So several months later, after me helping them structure things on their end, and we built a great repertoire between us, it was like, hey, look, you know what? We've got 17 licenses in the world. You've got the tech. We've got the sales funnel. These guys have deal flow, a tremendous amount of deal flow. Let's go into a partnership and actually do what we've all wanted to do. So we got a huge partner. They got the tech solution and a tech expert group to come in and help them with it. And then the third party company with the deal flow got tech and the sales funnel, which is something that's also still fragmented in our world of, where does the liquidity come from? The biggest problem with RWAs is not tech, it's distribution.
Yeah, I hear this all the time. So many founders out there and so many people in general have this idea that, they hear a fundraising round and they're like, oh, they just met them and like schmoozed them for like 2 months and then a deal was done. And it's just not like that, is it?
No.
Most of the time, there's real work behind the scenes, sometimes for years and years. And you realize that you work so well together that, this new partnership is born through a fundraising round like you guys have done.
Yeah, I mean, the fundraising round came because of the partnership.
Right.
The partnership came because our partner CEOs really wanting to get into RWAs, and then me and him also really connected in our alignment, our vision, our personalities, and everything that we wanted to build. And it was kind of building towards this idea of like, okay, we know we want to do something together. We just need to we know that the puzzle is a picture of a house with a dog in the yard, but we just need to get the right pieces into play to get there. And so sometimes that takes time of, planning or timing or really the stars aligning, so to say. But it's one of those things with fundraising as well as a lot of the guys at Mavryk, we have defense backgrounds to begin with. And it's like one of those things where you never should give up, almost, in a way. Like you should know when to give up if it's really like a bad situation, right? Obviously. But if you have a vision and a mindset and you're and a goal to a task, a mission to complete, then you will want to give up 50 times along the way. The stress of it, everything getting through, raising capital is not, you see someone raised, one of our competitors just raised an $82 million Series B.
Okay.
And you're like, oh, wow, people are throwing money around, and we can get to when money gets thrown around. But you constantly it's this uphill battle in a startup for years. And after every single time, my mom's like, I didn't go home almost for close to 3 years. I didn't take proper time off until December, until right before, right after we met, to go back with my family and spend some time at home. But I'd actually say I'd venture to say it's unhealthy. I can see my team kicking me for not admitting it's unhealthy, but just alluding that it is.
Yeah.
That founder journey for, coming up with an ideation and then a pitch deck. And you also have to make sure a pitch deck's good. I've been pitched twice this week. There's no team on the deck, or the team's not defined, or something else is not going on. And I'm like, guys, come on. Like, this is the simplest of tasks for starting a startup along the way on multiple different pitches that I was given. Some very basic functions, like elements that need to be in there that weren't. It's like, if I can't trust you to give me a good understanding, how can I trust you to execute?
Yeah.
So then there's getting past that, then raising, if you have a team or not, then building, then expanding, then next round. And you get kicked in the gut at every stage. And then you have your wins, and you just celebrate your wins, and it's great. And every year we've looked back and we've been like, wow, look at where we've come just from last year. But then you're still not there.
Mm.
So it's this grit, I think, that you need to have to get over the line.
Yeah, because most entrepreneurs I speak to, they say it's, 300x harder. It's going to cost you 30% to 3x more than you think it will cost you. And it's just never ending.
It's not even just the cost. It's I found that the smaller checks are the ones who cause you the most problems. The larger investors, really are seasoned more so. Obviously, it's you get outliers here and there, but a lot. Sometimes they come with caveats. I've had friends' companies that had poison pills in them and they lost everything.
So let's talk about that. I mean, either through your own experience or experience through watching your friends grow and scale their companies, specifically around picking the right investors. If you were to be able to go back now and talk to Alex from 10 years ago, what advice do you have for him?
Alex from 6 months ago should have bought out one of our investors, just to never need to speak to him again.
Yeah, because that's a real thing, right? I've sat down with investors as well that really talk about this, and they're like, be careful who you sign. And also for the other investors, do they get along? I mean, is that a thing that you have to worry about as well?
Thankfully, they all know the person's personality type. And so I've got nothing but backing.
Okay.
And it's more just pain in the butt stuff. You can get bad guys who will take you to court and all that kind of stuff. But thankfully, it's nowhere near that. And it's not like that. But they could just be a pain, and negative Nancy's, and always thinking that they know better than you, even though if they run their company to the ground as well. But you have to, I would have to say, outside of surface level annoyances, we've got some great backing of investors that through thick and thin have backed us in our decisions to expand and to pivot and to change, the mechanism of how we're doing or what we're doing. And so, I wouldn't, I guess from experience, I wouldn't have so much on bad investors. Thank God. Like, knock on a lot of wood.
Knock on wood. And what about the poison pill you talked about that your friend went through? What's the lesson learned there?
Every time that you take a check from somebody, you're giving it's some form of liability for them to have an opinion into how you run your company. And sometimes that can be good. I've been taken under the wing of some incredible people from a multitude of places, from, Joseph from Draper Gornholm to one of my senior British business partners who's like an older brother to me. And we started as business entrepreneurs wanting to do something together small for a newsletter that he backed and I wrote. And then now he's a senior partner of mine in everything that we do. We don't almost make a move without each other.
Wow.
And so it's you really, if you want to talk about, like, find someone that take you under their wing in terms of a mentor, especially if you're a first-time founder. Everybody needs guidance. Everybody thinks they have it sorted and that they know the right thing, but you will be wrong so many times. And it doesn't mean your idea is wrong. It doesn't mean that things are wrong. But, as a founder, the challenges you go through and the difficulties that you go through, you will need to be, think of it as like Bruce Wayne before he became Batman, right? He needed to be molded into the right form, in a sense. You're not born a rock star. You kind of become one over time. It's like turning a diamond, coal into diamonds.
And do you have a board of advisors or a board of directors as well that maybe they're not investors that have taken you under your wing, but under their wing, but you've brought on experts that are like, hey, I want to learn from you?
Yeah, I've got a good group of I'd say senior level advisory that I can pick up a phone and call when I need help or advice or want to run something through or get coffee. And it's usually, these guys are they're from different walks of life. from anywhere from real estate investors to family offices to hedge funds. Some are lawyers, some are entrepreneurs, but I find that when you get a plethora of information and intelligence, that you can then make a wiser decision from having a lot of wide range of information instead of being closed off. Like, you should always be willing to learn. And that's something that I've seen a lot of founders who are unwilling to pivot in their ways or their mindset or their positioning, or your brain needs to be a sponge of information. And only then can you make the right decision in a global context, because one decision right now might be the right thing, but it might not be the right long-term thing. And so you have to be able to see things from a wider lens of, how do I answer the short-term problems? How do I find a short-term solution and a long-term solution that complement one another? And you could only do that with more information. So when you have a wide council of information, you'll thrive. And when you don't have like a wide council of information, a wide swath of knowledge, you're stuck in your compartmentalized box. You're getting tunnel vision.
And so I'm also curious, what percentage of your time are you building and operating, and how much of your time do you think you're spending actually reaching out and talking to these people that maybe aren't like, neck deep or eyeballs deep into the RWA space?
Well, on our advisory side, or like the investor side, on
just getting advice or just checking in with people, and
It's funny, if you ask my wife, she'd say I never take advice, but she says the things that make you great in your business, hon, are not necessarily great applied at home. So
that's true on many accounts for many people.
Yeah. How often? I mean, I talk to one of my, I joke around with one of that British senior business partner that we don't talk to each other for 2-3 days, and he's like, "Where are you, honey? I miss you." And then he jokes with his wife that it's his mistress when he's talking to me. So it really depends on who, because you've got guys who are going to be like, you're in the trenches with you along the way.
Yeah.
And then you've got people who you also don't want to you want to keep them as an ace up your sleeve for when they're busy, they've got things going on. I've got someone who I respect tremendously, who theoretically used to be a boss through a long series of different organizations working together, but and then they invested in us, and then he's also like a form of advisory to me, and I deeply respect him, but I also don't want to waste his time. So I have to be very, and that's one of those things where it comes with experience and knowledge, where, do you go to this person at this right time? Are you ready to go talk to them? Or are you going to go burn that card and you don't need to reapproach them again, or maybe ever? So it's a wide swath of people around, and you need to know how to, like, who's there that you can call in the middle of the night, and who's there that you want to be careful out of respect, not out of something strange, but they're busy, you're busy, you want their help, they're taking you on, and whether just because someone invested in you doesn't mean that they give you their time either.
Interesting. Yeah, I've heard that as well.
So you
be very selective of how you're using different people's time. Yeah, fair. You're raising another round right now, in the middle of one. Can we talk about that?
We can talk about that partially.
Well, I just want to know, in terms of how are you approaching your fundraising now, and what's the vision you're selling to these investors? What's the vision for Mavryk in the next 2, 3, 4 years?
2, 3, 4 years. Crypto, give it 3 months, it changes.
Right.
So the way that it approaches, like, once you're off the ground, your MVP's there, we've got a partnership, and we've got, deal flow coming online in Q2. So that's, we're in a really different, I'd say we're going, in my opinion, this next round's going to take us to being from startup into scale up / business. And so that's a very different transitionary period. Most startups die in this startup phase, and then the next series die in this phase. But when you get to these higher levels, I would say that it depends on how you're raising. It costs a bit more money to raise money at these levels than it did before. You'd have cap raising fees, and they tend to be higher when you're in a startup scene, because you're raising on sometimes thin air, right? Or an MVP or a vision or a dream. Where here, it's still a vision or a dream, because if you don't have revenue coming in, or you're not cash flow positive yet, or you need more people in order to get there, then it's still, okay, how do we know that you're going to make it and not these other 6 companies? Why should we put money into A instead of B, C, D, E, F?
Especially because you said there is BCDEF coming online in 2026.
Well, it's to me, the best part about this is that it's a rising tide raises all ships. And so we actually now, we were showing, part of our presentation materials was showing, hey, this is, to validate our idea here is that this guy did this one piece, this guy did that one piece, but then they've got these struggles. There's pros and cons to everything, also your competitors and also yourself. So you can point and say, okay, well, it's hard to look and go to Securitize who just did almost $1.5 billion IPO, if you think about including the money raised, and then say, we're doing that.
Right.
It's like, well, it's so far away from kind of where you are at the moment. So you have to have something closer up. So then all of a sudden a competitor, or I'd say complementary competitor, raises a round that's closer to yours, and you can point and say, hey, look, like this validates everything that we're doing, and we have this deal flow. So you're too late for them, but we're early. And we've got these pros that, negate the cons that they have on that end. So I don't look at it as competition of, what's coming online in a sense. It's more of, it's a rising tide raises all ships. The whole world is going digital. It's just a matter of, who, what, where, how, why. I think that this idea of like one winner takes all and most things doesn't work. If you look at how many banks are there in the world and bank branches, how many models of cars, how many phone clothing manufacturers are there? So humans are innately not unified in that aspect. So the more that comes online right now, the better it is for our entire industry, the easier it is to raise capital. And also the more deal flow you're going to end up getting as everybody's rushing to come online, and you can offer a better product at a better rate. Yeah.
I love that. Okay, beautiful. So tell me a little bit about, you guys are coming online in Q2. I want to hear like something real and tangible that you can give the community. A couple of Mavryk followers are going to be watching this going like, give us the juice. What's coming up in 2026 that you can reveal to us?
2026. I think that's going to be the most exciting part about 2026 is everything we've been building for so long is coming online. So that comes, from the equities tech stack of our partnership with Multibank and being able to go and buy real estate, whether it's in Ras Al Khaimah or Dubai or the Ritz-Carlton or a Khabib gym, right?
So am I going to be able to buy if I get on Mavryk?
You'll be able to go on Multibank.
Yeah.
Onto their well, as they call it now, they just rebranded a few days ago as and rebuilt their whole platform, MB.
Okay.
Which is powered by Mavryk.
Okay.
And specifically our equities tech stack. Yeah, there's a lot of puzzle pieces coming into that, but you'll be able to go to mb.io and take $100 or $1 million and go buy a fractional piece of a hotel or a private equity of the UFC champion Khabib's gyms.
Interesting. Okay.
So that's pretty cool. And then also Maven will go live. So you put $1 million into a gym, then you can go borrow against it at Maven.
Interesting.
Go buy more assets or an
And when will I be able to do this, you think?
The MBIO RWA platform comes out early Q2. Token 2049.
2026. Okay.
Token 2049 is around the corner. So we've got a lot of deadlines that we're trying to hit around that time frame. And then Maven will be coming out. We have to do a whole code audit of that thing, and it's a beast. It's you don't just like build a bank and deploy it, and you don't control the bank once you deploy also. So that'll be coming out shortly thereafter. Here's something that I haven't talked about publicly yet. I mentioned it. Is a perpetual prediction market that allows you to put a trade on changing data. So like imagine like right now prediction markets are like binary outputs of, will the US strike Iran by January 28th? Yay, nay, right? And the yays pay the nays and the nays pay the yays. But that's, imagine if it's like, Trump's approval rating, right? And that's constantly a very volatile for any president, but especially one. That number moves. And so you'll be able to trade whether it's moving up or you think it'll move down. And then leverage against that.
This is the gambling piece you're talking about.
It's called trading.
Okay.
It's not gambling. But it's the trading. It's the volatiles, because trading is about when you're trading, you're not really effectively caring about the underlying fundamentals of the asset. You're just trying to catch the profit in the volatility.
Right.
Where in investing, you care about the fundamentals underneath.
Yeah.
So for some people, they for the thrill of it, or they're good traders, most are not. They want that speculative trading aspect, especially with leverage.
Mm-hmm.
And then others want, that fundamental. I'm gonna put away $500 a month into an investment portfolio. It's gonna pay me dividends. I'm gonna reinvest that, and it compounds over time.
Mm-hmm.
And that's the safe and structured way. And then there's the volatile, Hail Mary pass for the end zone on the trading side.
I love it. Okay, well, you heard it here first. That's cool. We'll unleash that to the world in a few weeks. Alex, just to leave this note off, what is the future of real world asset tokenization?
I think in the future, we're just going to call them assets.
Just like we call music instead of digital.
On MP3.
Right.
Right. So there are the same way that everything is now digital, right? You don't almost write down phone numbers. You save a contact. You don't send a fax. You send an email or send a letter. Right? Even faxing was the first, kind of transitionary period. The future of RWAs is basically the really crazy take. I am not a fan of UBI, of usage-based insurance. Sorry, there's acronyms on acronyms, of universal basic income. But I don't see a way that with AI and robotics and the sheer amount of people that we have in the world, that we don't get to a place that we need universal basic income, because there's just not going to be enough jobs for enough people, and then getting everyone's basic needs met, etc. So I actually think that we didn't even get to the dollar issue, but the tokenization of assets is going to allow for the universal basic income, and all assets will be tokenized. So you're going to get to a place where there's not going to be enough jobs. You're going to get some form of your basic needs covered, and then tokenized investments will be the way that you kind of move up your stature or class. Let's call it social economic class in the world. Is by you. Okay, so you bought a little bit of this and then you traded for that, and then you moved up here because there's just not going to be enough jobs, and you're going to get paid $2,000 a month to get your basic needs met. So I don't find it a coincidence that the same way Bitcoin came out right after the banking crisis, that the dollar is being printed into an oblivion. Fiat money is failing at the same time that crypto is coming out. And at the same time that we're going to start losing jobs to AI and robotics. So I feel like where the matrix meets itself in all these things is that all assets and value in the world will be tracked on chain, whether we call them RWAs or tokens or just assets, it doesn't matter. And your entire net worth and portfolio and money will be in a wallet, and then you'll need to trade up to get out of your social class, or invest to get out of your social class, or start a business that you then offer in that way.
This is a scary Black Mirror world you're painting right now.
I don't think it's scary in a way.
No,
it's not really scary to me. It's just kind of like, everyone's needs are met. You can still have social mobility. You still, it's not really scary in that sense. But what's interesting to me is that we're printing the dollar into oblivion at the same time. People keep asking, how are we going to get liquidity for private equity? If you're digitizing, giving access to $280 trillion worth of locked private equity, where's the cash come from to have liquidity there? Well, just conveniently, we're printing the US dollar into the oblivion. And so that's where that kind of has that match and overlap. We need this money printing in order to give liquidity to illiquid assets. So that's on that money printing side. The dollar's going down in terms of value, but the idea that your net worth will be managing assets, I think, is kind of where the tokenized. It's not even about being tokenized. It's not even. It could be digitized. It's that we're going to a place where we're going to have less jobs for people, and we're going to need to have some form of free market capitalism that we don't have today, while also avoiding socialism and communism. So that's that future I think we're going to be moving to.
Absolutely fascinating. Alex, I could talk to you for hours and hours about this.
I have one last line on that where, like, Larry Fink, I think it was Larry Fink, he said, it's like, you will own nothing and you will be happy.
Yes.
Right? I think it's actually the complete opposite, is that you will own a share of anything and everything and you will be happy.
Interesting. And yeah, spoken like a real tokenizer.
That could sound so bad.
Alex, thank you so much for your time today. You've like really made me scratch my head a little bit about where we're going, and it's quite exciting that you're at the forefront of architecting something like this.
Yeah, like I said, just making making my mom happy that I didn't become a doctor. So I'm writing a PhD thesis on blockchains as parallels to nation-state economies.
Interesting.
But maybe I'll become a doctor then and make her happy. She's proud. But
I think she is too.
happy to be here. Thank you for the time as well. And looking forward to, well, more.
Yeah. Thanks, Alex. Lucidity Insights was founded on the premise that educating startups on the regional tech ecosystems and the key stakeholders within them will not only lead to a healthier and more sophisticated startup ecosystem, but it will also lead to a stronger startup economy, which will benefit the economies of entire countries and the emerging MENAPT region as a whole. You can check out more at lucidityinsights.com.